Big Tech just dropped their latest earnings, and one thing is crystal clear. The AI boom is not slowing down. In fact, it's accelerating faster than most people expected. But here's the twist. While companies like Meta, Google, Amazon, and Microsoft are making billions, one sector could be the biggest winner of all. This week, tech giants including Meta Platforms, Alphabet, Amazon, and Microsoft reported their quarterly earnings, and the results confirmed a major trend shaping the future of tech. Artificial intelligence is driving everything. Let's start with the numbers. Cloud computing, the backbone of AI, is growing at an incredible pace. Google Cloud posted a massive 63% growth. Microsoft Azure grew 39%, and Amazon Web Services, or AWS, came in with 28% growth. These are not small numbers. These are explosive growth rates for already massive businesses. And what's fueling all of this? AI. From chatbots to enterprise automation, companies are pouring billions into AI infrastructure, and that means one thing: higher spending on data centers, chips, and advanced hardware. Now here's where it gets interesting. While big tech is making headlines, the real winner might be the companies supplying the technology behind AI. At the center of it all is Nvidia, the global leader in data center GPUs. Every time a company builds AI systems, they need powerful chips, and Nvidia is the go-to supplier for almost all major tech giants. With new platforms like Rubin expected to launch soon, Nvidia is positioned to capture even more of this massive spending wave. But it's not just Nvidia. Micron Technology is also benefiting, especially as memory prices rise, a key component in AI systems. One of the most important insights came from Mark Zuckerberg himself. Meta reported strong results. Revenue jumped 33%, driven by higher ad impressions and rising ad prices. But surprisingly, the stock dropped. Why? Because Meta increased its capital expenditure forecast from $115 billion to $135 billion to as much as $145 billion. That's a massive jump. And Zuckerberg made it clear, this isn't random spending. He said higher costs are largely due to expensive components like memory, and more importantly, Meta is confident that these AI investments will pay off. In simple terms, Meta is doubling down on AI, and they're willing to spend billions to stay ahead. This tells us something very important. The AI boom is still in its early stages. Companies are not slowing down. They're actually increasing their spending. Alphabet even hinted that capital expenditure could rise further by 2027, so this isn't a short-term trend. It could be a multi-year growth cycle. And yet, many semiconductor stocks are still trading at reasonable valuations. For example, Nvidia is growing at over 70%, but trades at a PE ratio around 43. Micron is growing even faster, with a PE near 24. Compare that to many software companies, some trading at 20 times sales, and suddenly chip stocks don't look expensive anymore. Historically, semiconductor stocks have been cyclical, meaning they go through ups and downs. That's why many investors are still cautious. But this time could be different, because AI isn't just another trend. It's becoming the foundation of the entire tech industry. And as long as companies keep investing heavily in AI infrastructure, chip makers could continue to benefit for years. So, here's the bottom line. Big tech earnings just confirmed that AI is not hype. It's real, it's growing, and it's accelerating. And while companies like Meta and Google are leading the charge, the biggest winners might be the ones building the tools behind the scenes. The question is, are investors paying attention early enough, or will they realize it after the biggest gains are already gone?